Hello there. Welcome to Cost and Management Accounting N6. Today, we want to look at a question, still working on a question paper of November 2022. And this was question 4 from that question paper. And the question requires us to prepare an income statement and some questions that are going to follow. The question reads, Hammer and Nails Limited manufactures steel cabinets. They provided the following information from the accounting records for the year ended 28 February 2019. Then we are given a table where we are having these figures. And then beneath the table, on the first part of the question, that is 4.1, the question reads, prepare the income statement for Hammer and Nails Limited according to the direct method. This is the first part of the question, and it is 10 marks. So we are going to go through this income statement. And remember, on the income statement, we are going to start with the sales. We are going to start with the sales figure. And if you look in the table there, the information that we are given, we are not given the value of the sales. We are only given the selling price per unit, which is 120 rands. And then we are also given the number of units manufactured and sold. So this is the number of units that were sold, which is 1,200 units. One unit having a selling price of a value of 120. So basically, for the sales now, we are going to multiply the number of units that were sold times the selling price per unit to get the total value of sales. If you come here on the answer section now, here we are now on 4.1. So here we can say we are now on 4.1. And 4.1 requires us to prepare this income statement. So we are going to start with the sales. So for the sales, remember, we are having 1,200 units. If you can go back to check there, we are having 1,200 units here. 1,200 units here, each unit with a selling price of 120. So we are multiplying the 1,200 times 120. So if you come here, you say 1,200 in brackets, then we multiply by 120. So if you multiply those two, you're going to get 144,000. So here, we are getting 144,000. That's the value of the sales that we have. Then from there, we are now, remember that we are using the direct methods. We come here, we less variable costs. We less variable costs that we are giving in the question. What we are going to do is we're going to list all the variable costs that we have in the question. Then the total of the variable costs will come here. So we can go and try to identify those variable costs that we are given in the question. So we start from above. If you look at there, we have got direct material. Direct material also is a variable. It's a variable cost, and we are given the value per unit, and we know that we have got 1,200 units that we have there. So here, to get the total direct material, we are going to say the value of the direct material 1,200, then you multiply by the 10 per unit that we are given there. So you can go back on the other section and try to summarize that one. So we have direct material. Direct material. Then remember, we are having 1,200 units, and the value per unit of direct material is 10 rands. So you multiply the two, there you get 12,000. So we are having 12,000 here. Right, so that's what we have in terms of direct material. We go back to check another variable cost that we have there. We also have direct labor. Direct labor, we are having direct labor, and we're giving it as 5 rand per unit. We are giving it as 5 rand per unit. Then we multiply this 500 per unit times the number of units that we have, which is 1,200. So we come here again. Come here, and then we try to put that figure. That is direct labor. So on direct labor, remember, we are having the same number of units, 1,200, but right now we are multiplying by 5. That is for direct labor per unit. If you multiply that one, you are going to get 6,000. So that's what we have in terms of direct labor. We go and check again other variable costs that we have in the question. We also have this one, which is the variable manufacturing overheads, 800. So we are going just going to take the figure 800 that we have there and put it there. So if you come here, now, we have variable manufacturing overheads. Variable manufacturing overheads. Right. The figure that we are given is 800. So we're going to put our 800 here. Then we go again to check if we have got another variable cost that we have in the question. You'd see that we also have advertising that is here, which is 45% variable. And the advertising cost, the total that we have is 10,000 here. That is the total for advertising cost. But 45% of that one is variable, which is 45% of 10,000. And remember, we are going to put it as one. We have selling and distribution. Selling and distribution covers advertising. We have got selling and administrative. Sorry. So selling and administrative. The selling part is going to cover the advertising. Then the administrative is this one, which we are having 50% fixed, which is administrative costs, which is the total is 15,000 a year, and 50% is going to be fixed, and it means the other 50% is also variable. So for selling and administration, we are saying it's covering this one, advertising and administrative. So we want to see the total. We are told that for advertising, 45% is variable. So what we are going to do is we are going to say 0.45, which is 45% as a decimal. We multiply by the figure for 10,000 that we are given there to get the specific figure for variable. So if you multiply the two, we are going to get 4,000, 4,500. So this is the variable part of the advertising. Then for administrative, we are told that 50% is fixed, which means the other half is also variable, and the total is 15,000. So we are going to say 50% is 0.5, then you multiply by 15,000. Then you get 7,500. So the total selling and distribution, now we add this one plus this one, which is 4,500 plus 7,500. Then we get the variable selling and administrative costs. So this is the one that we are going to summarize here. We are saying variable selling variable selling and administrative costs. So that's what we have there. And remember, what we did, we are supposed to add 4,500 for the advertising, which is the selling part, and then we add 7,500 for administrative. Then the total that we get there is 12,000. So here we have 12,000. So that's what we have there. So we check again if you have got another variable. We are seeing that here is the last one being variable. After that, we have got a number of units manufactured and sold, and then selling plus per unit. So that's the end of the variable part. Then so we can now add to get the total. And remember, the total we said is coming here, where we are saying less variable costs. So the total will come here. So what we are supposed to do here, we are saying 12,000 plus 6,000 plus 800 plus 12,000. So if you add those ones, you are supposed to get 30,800. So our 30,800 is coming here. And remember, we are saying less. Whenever we are saying less, we are subtracting. So you can show by putting brackets. And then when we subtract, so what we are now doing, we are now saying sales minus variable cost, which is 144,000 minus 30,800. And then the answer that we are getting there will come beneath the where we call that figure marginal income. Marginal income. So here now we say marginal income. And then the figure that we are getting there, if you say 144,000 minus 30,800, you are supposed to get 113,200. So you get 113,200. So that's the marginal income. So beneath marginal income now, we subtract the fixed costs. So we are saying less fixed costs. So that's what we have there. So we go to the question again and try to find out the fixed cost that we have. And remember, we are putting the fixed cost just below this fixed cost, and then the total will come in line with less fixed cost here. So that's what we are going to do. So we can go back to check the fixed cost that we have in the question. If you come here, you'd see that starting from the top there, the first fixed cost that we have is here, fixed manufacturing overheads. Fixed manufacturing overheads, which is 1,500. So we come here, and we now have fixed manufacturing. Manufacturing overheads, and the figure that we are given there is 1,500. So we are putting 1,500 there. Then we go again to check other fixed costs that we have in the question. Other fixed costs that we have in the question. So if you check there, we have here where we have advertising and administrative. Remember, we allocated here is 4,500 when it was variable. So here we were calculating the variable part. Right. So for the fixed part now, we are now saying, remember here we said 0.45 times 10,000 to get the part of advertising. But for fixed, now we are saying 100 minus 45, we get 55%. So the 55% component is now the fixed. So here we are now saying 0.55, then we multiply by 10,000. So if you multiply the two, let's try to multiply that one. Right, if you multiply the two there, you are supposed to get 5,500. So this is the part of advertising. Then administrative is 50%, the same as here. We are now saying 0.5 again times 15,000. Then you get 7,500 again because it's half there. So for the total of fixed variable, sorry, for the total of fixed selling and administrative, we are now adding this one plus this one. 5,500 plus 7,500. So we can go there and summarize that one. We are here. We are now saying fixed selling and administrative costs. And remember, we are saying 5,500, and then we're adding 7,500. So if we add the two there, you get 18,000 here. So that's what we have there. You would see that this is the last part of the fixed costs. Beneath that, we don't have anything. So we are going to add to get the total for fixed costs. So we are now adding 13,500 plus 1,500. then we get 14,500. And remember, we are saying less here, so we are subtracting. So here we are subtracting again. Then when we now subtract 113,200 minus 14,500, you get the figure that we are putting here, which is the net income. So if you subtract the two, 113,200 minus 14,500, you are supposed to get 98,700. So it's coming here, 98,700, and this figure is the net income. So that's what we have in terms of the first part, that is the preparation of the income statement using the direct method. So that's what we have here on the first part. The second part, we are now here on 4.2, where the question is saying calculate and round off to the whole number, the break-even quantity. The break-even quantity. So we can as well try to come here and calculate it. It's 4.2 now. Right, on break-even quantity, we are coming to 4.2. So this is the break-even quantity. So the formula for finding break-even quantity, we say total fixed costs that we have over selling price per unit. Selling price per unit minus variable costs per unit. So this is the formula that we are going to use. So we check the fixed cost that we have. If you go to the income statement that we prepared, that's where we are going to have the fixed costs. Fixed cost, remember, we found it as 14,500. So we are going to put our fixed cost as 14,500. So here we've got 14,500 as our numerator. Then for denominator, selling price per unit, we get it in the question. It's here, 120,000. 120 rands. 120 rands is the selling price per unit. So you come here, this is the 120, which is this one. Then we subtract the variable cost per unit. Right, the variable cost per unit, we go again to the income statement that we prepared there. We are going to see that we only have the total figure for variable costs, which is 30,000, 30,800, this one. And we know that the total number of units is 1,200. So we are going to say, to get the variable cost per unit, we are going to say 30,800. Then we divide by 1,200 to get the variable cost per unit. So we can try to calculate that one and see what we get there. So if you divide there, you are supposed to get 25. 25 here, you get 25.666. The 6 is recurring there, so you can just put it maybe to 4 decimal places as 25.666. Right? That is the variable cost per unit. So we can come down there to see to substitute it into the variable cost per unit. So if you come here now, we are saying 120 minus 25.6666. So if you subtract there, it becomes 14,500. And then we divide by, then we subtract here 120 minus 25.66666. We get 94.33. And this one is to 2 decimal places. Then we divide now 14,500 minus, so 14,500 divided by 94.33. So if you divide there to the nearest whole number, it becomes 154 units. So that's what we have. So this is the break-even quantity. The break-even quantity. The quantity we have there is 154 units. So we go to check the next question. On the next question now, 4.22, it requires us to calculate the break-even value now. The break-even value. We'll go to 4.2.2. We have the break-even value. So what is important is to put down the formula first. So break-even value, we are saying it's break-even quantity. Then we multiply by the selling price per unit. That's what we have there. Then the break-even quantity is the one that we calculated here. We got 154. Then the selling price per unit, we can always go back to check in the question. It's the year, which is 120. 120 rands that we have there. So we are multiplying here by 120. And then when we multiply the two, the answer that we are going to get there is 18,480. So that's what we have in terms of the break-even value. We can as well go and check for the next question after 4.2.2. If you go back there, you see that the next question is saying margin of safety ratio. Margin of safety ratio. So this one, we are supposed to present it as a percentage, margin of safety ratio. So we can go back again and put the formula first of margin of safety ratio. All right, here we are now on 4.2.3. So this one is the margin of safety ratio. So it's equal to sales. This is the sales value. The sales value, we can just maybe specifically indicate it as the sales value. Then we subtract here the break-even value. And then we divide by the sales value. And then we multiply by 100 over 1. So this is the break. This is the ratio that we get there. Remember the break-even value. Break-even value here is this value that we calculated here. When we multiplied by 120, we got the break-even value. Then the sales value, we have it in the income statement. The sales value, we can go up to check it. We have it in the income statement. Right, if you come here, you would see that the sales value is this one, 144,000. 144,000. So we can go back to substitute that one as our sales value. Right, here we are here now. Right, our sales value. Remember there we got them, it is 144. 144,000. Then you subtract the break-even value that you are given on top there. Remember, it's just on top there, the break-even value, which is this one, 18,480. And then we divide by the sales value again, which is 144,000. Then we multiply by 100 over 1. So we try to calculate that one. We try to calculate that one. We are supposed to get 87%. So this is the ratio that we have, right? So this is the question that we have here. Then we look at the last question that we have in the question. It's saying draw the break-even graph. Draw the break-even graph. So here we are going to make a drawing, but remember, what is important is for you to understand what we mean by the break-even point. So the break-even point basically represents a point where we are making a profit of 0. And when we are making a profit of 0, we are saying the total costs that we have will be equal to the total sales revenue that we have. Remember, total costs, we say variable costs plus fixed costs. So this value that we have for total cost will be equal to the sales revenue, or the sales that we have. For instance, for this scenario that we have in this question, the point that we are going to have the break-even value of 18,480. That's when we had the break-even value. 18,480 was the break-even value. So what it means is that this figure of 18,480 represents the point where we are having total cost as 18,480, and at the same time we are also having our sales revenue as 18,480. So that's what we have there. So on graphical representation, we also have to take note that the fixed costs do not change with the level of output. Fixed costs do not change with the level of output. So what it means, even if our output is 0 units, our fixed costs will be the same. Whether we are going to produce 1,000 units, our fixed cost will be the same. So you see that the fixed cost curve is going to start on top, because even if we have got 0 units, we are also going to have our fixed cost. So if you come here, where we are having our graph, we are having this graph. Remember, our fixed cost according to the question, we got 14,500. So the fixed cost does not change, so we saw it as a horizontal line. So we are saying even if you produce 0 units at this point, that's where we're having 0 units, the fixed cost will be 14,500, and no matter what level of output, even if we are here, maybe we are at 2,000 units, so you don't know, we are also going to incur the same amount of fixed costs. That's why it becomes an horizontal line. So our total fixed cost curve is going to start here. It's going to start here because we are having 14,500 as fixed cost, even if there's nothing that is being produced or sold. So we start here, the curve for total fixed costs. So we are going to draw the figure for total costs starting from here, going up. So this is the curve that we have for total costs. So this is our total cost curve. So what it means, the variable component is going to be the vertical distance that we have between the fixed cost curve and the total cost curve. Then the sales revenue, remember, when we do not sell anything, that is here, we are here at 0, it means we are not going to get anything. So the total sales curve will start at this original point, which is here at 0. So it's going to go up. Going to go up here. So this one will represent our total sales curve. Total sales curve. And remember, we said at break-even point, that's the point that we are having, our sales revenue, total sales revenue being equal to the total cost. And that point is where we are having an intersection of the total sales curve and the total cost curve. And that intersection is here at this point. So what it means is that this is the break-even point. And we know that the break-even point, according to the calculations that we made, was 18,480. So this is going to represent 18,000 here, 18,480. 18,480. That was the break-even value. This one was the break-even value. Then you also have break-even quantity. Break-even quantity quantity is 154, and it's shown on the horizontal axis here. So the 154 will be somewhere here. So we are going to go down with our break-even point down to go down here. So this one will represent 154 as our break-even. So this figure is now our break-even quantity. So that's what we have. And then remember, the total units that were sold were 1,200. So it means that 1,200. So we can maybe prolong our graph there so that we represent the point of sales, the sales point where we hit 1,200 units. So here we are saying our graph is going. Is our total. This is our total sales. This is our total sales, right? So this one we can make it go up again, right? So that's what we have there. And then the point that we are saying 1,200 is representing the total sales. The sales quantity will be on the horizontal axis, and then the sales revenue will be here. Maybe we can start with the sales revenue. And remember, the sales revenue was 144. We can show it this side, 144. 144,000. Then we can make a. So this is the point. And then if you make a vertical representation there, going down to the horizontal axis, that's where we are going to represent the sales quantity. So here, that's where we are having our 1,200 to represent our sales in units. So this one, remember, we are saying this is the break-even quantity, and this one represents the sales output, sales level is 1,200. So that's what we have in terms of this graph of the break-even graph. So this is the representation that we have. So this is our graph. We have represented the important points that were supposed to be highlighted in terms of the break-even point here. This is the break-even value, then break-even quantity. We represented it down there. It's here, and then this is the sales level in terms of the quantity. Then this sales level in terms of the value. We are having it here. So basically 144,000 is now our sales. Here is our sales value, 144,000. And this represents our total cost curve, and this is our fixed cost curve, and this is our total sales curve. So this is what we have in terms of this graph. Hope this is going to assist you as you prepare for exams. Stay tuned for more videos to come as we are still coming to prepare for our exams. Those who haven't subscribed, please subscribe and share. We are going to meet again in the next video. With that, I'm signing out.